I'm thrilled to have Zach Lemaster on today. Zach got his intro into real estate house hacking and would have had no idea at the outset that he would actually start his own real estate turnkey rental business, Rent to Retirement. Hi, welcome back to another episode of How I Started. My name is Noah Bacon. I'm so excited to find out how Zach went from new investor to business owner in just a short amount of time, and today Zach's going to share some tips and tricks about how it's not too scary to get started out today, and some of the pitfalls that you may have early on in your career but won't make you stop going and moving forward. So Zach, thank you so much for joining me today.
No, I'm super excited to be here. Thanks for having me.
Absolutely, my friend. And like I said, with the name of the show, How I Started, we're going to reel back the clock here a little bit, try to get to know you from day one, and then we'll speed up to today and hear about what you're doing. But Zach, can you kind of set the scene for our audience and tell us about what you were doing, what got you interested in real estate, and how you just started thinking about your first deal?
Yeah, absolutely, Noah. And I think that many people, when they first start thinking about real estate, they're attracted to real estate for a handful of different reasons, and rightfully so. But I think I was attracted to the fact of it's just a tangible asset. I was really interested in the idea of creating passive income or semi-passive income, residual income from rental properties that had additional benefits through appreciation, tax benefits, etc. But, I didn't know all the things about real estate that I knew today. I just knew that I wanted to at least figure it out and try it out. And so the first house that I bought was a duplex. I was in the military as a young captain, and so I had access to a VA loan. I bought a property with no money down through the VA loan, which is a great loan that is still around today, and bought a duplex and basically house hacked it. I lived in a real estate property that I could basically live for free, and I also owned an asset that had tax benefits, was appreciating over time, and that was my first kind of entry point into real estate, and I just got the bug.
So let's break down that first deal then. Can you tell us where you were stationed, and what got you kind of thinking about utilizing that VA loan? Because we've actually had a guest on before, Angel Garcia, who talks about the VA loan a little bit. And I think for, being in the military, it's just not presented to you in a way that I can use my primary residence as an investment property. So can you tell me what got you thinking in that way to use a primary residence loan for investment purposes?
Yeah, well, I think I've heard you call the Kiyosaki books the Purple Bible previously, Noah. So that and many other things, early on. I think this was even pre-BiggerPockets, but just learning a lot through some of the books about how to think about investing. I mean, certainly the military doesn't have any courses about investing and how to be financially literate, just like some of our traditional educational system. But I knew that I was interested to invest in real estate. I obviously needed a place to live, and I just kind of like the idea of owning versus renting. But the idea of being able to buy a property that's a multifamily property, a small multifamily, which can be 1 to 4 units or 2 to 4 units, where you can still put either little to no money down. In the VA loan, you have the potential to put no money down, and you can actually rent out the other units. And then you have some tax benefits, which I'm sure we'll talk about when we exit the property, where you don't have to pay capital gains potentially. So that was extremely advantageous for me. But that's just kind of got the juices flowing of like why to start investing in real estate. And that was a really impactful first experience for me.
So now that you've got the education foundation pretty much set here, and like I say all the time, that little purple Bible that every investor likes to say that they've read before they got started was pretty much a guiding light for you. Can you tell me what the deal looked like then and where you were, location, price point, just to kind of set the scene again here for our audience?
Yeah, I was stationed in Grand Forks, North Dakota, which is not like a super desirable investment market. The Air Force tends to have bases in just random locations, kind of desolate places, but nonetheless, it was a location where I was able to, acquire the property. I think it was around $150,000. And looking this up today, because I knew we were going to talk about this, I saw what the property's worth today, and it's like $360,000. And I think everyone can relate to this, but like, I wish I held on to that asset. But nonetheless, yeah, I think I bought it for around $150,000. Again, I put zero money down. I believe my mortgage payment was, roughly around $1,100 or something like that. I lived in the top unit. I rented out, because there's a split level, upper lower, and I rented out the lower unit for something like $1,300. So it was pretty much I was living for free in that first property.
That's awesome. And it's kind of funny that our numbers for our first properties are really similar. My first house hack was in 2021. I had an $1,100 mortgage. I had 2 extra bedrooms and rented it out and was making about $200 a month. It wasn't a home run. It was just enough to kind of set that foundation, get me on base, and really start to think about ways to move the equity around in the future. So, Zach, obviously with the deal today, like you said, the property worth $300,000. Is this something that you could replicate again today? I know the numbers may not look as sexy on paper, but is it something that, a first-time investor could get into using that VA loan?
Yeah, I think there's a lot of questions around when we hear about people's stories previously. It's like, oh, well, that was that point in time. The reality is that there was nothing special about the deal. The concept and the fundamentals remain absolutely the same. So yes, the numbers are slightly different in terms of interest rates and mortgage and home prices and rents and all these things, but the concept remains the same. And this was over 10 years ago that we bought this first duplex. So it was quite some time ago. But I think to your example, Noah, I mean, you can still do this today. The VA loan is still around. Interest rates are just a variable at a point in time. But the whole concept of being able to house hack in a deal where you can dramatically reduce, your cost of living and that you can eventually turn into an investment, that is a great way to get started and still remains today.
Now that we've heard about your first deal, it seems like a pretty repeatable process. Can you talk to me about some of the lows that have gone on in your investment career? Because I know starting out, it can really feel like the world is on your shoulders, and one wrong turn can ultimately make you maybe not even want to invest in real estate moving forward. Were there any properties that you had that just had left a sour taste in your mouth, or it was a terrible outcome that you had, Zach?
Yeah, so after that first duplex, I mean, we got the bug, and I always tell people this, Noah, but I've grown a very successful portfolio that's allowed my wife and I to basically retire early from our career path in healthcare. We were both optometrists by education, and we've been able to replace that over time. That didn't happen overnight, but it happened over many years of intentional investing. There was a pivotal moment in our investing where we started to look out of state. People in the military, they're transferred around, every 2 to 3 years quite often. And so you can't really be focused on just investing in one location. Plus, Grand Forks, North Dakota, again, is not the most desirable place to invest. So we started within 2 to 3 years of investing, looking out of state to invest, because we knew that we could find markets that had better return on investment, that were more conducive with our goals, had better growth potential with, population trends and things like this. But our first investing experience out of state was not fun. We actually bought, quote unquote, a turnkey property that was in a really low income area from someone that rehabbed a house and did a good job on the rehab, but really there was poor management. The tenants damaged the house. We just had a terrible investing experience out of state. Like, we could do a whole show on all the mistakes we made, not going through due diligence and being in not favorable locations, not understanding the local laws and regulations. But out of that experience, is really the birthplace of our company today, Rent to Retirement, which is a very well-known company with a very good reputation in the turnkey space. And my point is that we took those negative experiences and built better systems and procedures around that. And we didn't let that stop us. Any form of investment, there's always going to be obstacles, right? There's always going to be fluctuation in performance. And real estate is no exception to that. So one thing that's allowed us to be successful is just staying focused on what is the long-term picture and not letting obstacles or variances or possibly properties where we're losing money prevent us from taking the next step.
So, Zach, what did you learn from in your own personal portfolio? Obviously, the birth of Rent to Retirement came from a lot of the things that you saw were negatively impacting your own personal portfolio. But what did you learn from this? Did you decide to pick better locations? Were there, like you said, operational failures that you recognized that, we can make more money if we change this simple one process here? What was the learning experience that you got from that?
Yeah, so much. Again, no, we could probably do a whole, day on this show. But ultimately, I think a few key takeaways would be that first, we were hyper focused on investing in our local area because that's what we knew and felt comfortable with. But over time, we realized that, hey, there's actually better opportunity to invest in different locations. So that was kind of the first light bulb. But you do need to go about that in a systematic way. Just, I would argue that's the same thing you need to do even if you're investing locally. Build out your investment criteria. Don't arbitrarily just randomly invest in different markets and properties just because you're investing. I mean, have a plan. And it's okay when you're first getting started not to have everything figured out. Real estate investing is a lifelong journey. You figure it out as you go. But I think when we were investing out of state for the first time, the biggest mistake we made is just not being comfortable understanding the location. We looked at numbers on paper, a pro forma on paper, which pro forma is always an estimated return on investment or estimated performance for year one, without understanding, what type of capital expenditures or maintenance reserves do we need? What about tenant turn and vacancy, understanding property management fees? But the big thing is in understanding the locations that we invested. So like today, fast forward to today, we mainly focus on build to rent properties in B and A class locations where you don't have a ton of variance in maintenance and capital expenditures because it's a brand new house. So we love new construction for that purpose. And we're generally attracting better quality tenant that have longer occupancy times, reducing vacancy. And new construction, are usually built in growing areas. And that's really what's allowed us to continue to scale up our portfolio, is growing equity and 1031 exchanging it, is just investing in good locations that have significant growth. And then properly vetting the people you work with, right? Property managers, having the right loan structures in place, understanding the tax benefits to real estate. That has really allowed us to catapult our investing, is understanding things like accelerated depreciation, 1031 exchanges, house hacking your primary residence and being able to sell it without paying capital gains and things like that. So just understanding all those things over time and learning how to apply those rules is really, I think, what it takes to be successful long term.
You basically took the words out of my mouth. My next question was to fast forward to today. And I wanted to ask you to today, you've already hinted at you and your wife have already achieved an early retirement that a lot of people dream of when they are trying to get into real estate. So how many deals have you done today and what does your portfolio look like today for you guys?
As a business rent to retirement, we've done over 3,000 deals. Again, those are mainly build to rent. On the personal side, I don't even know. There was a point in time, I think we had over 200 doors, but we've really scaled that back. And again, that was 15 years of investing, right? This didn't happen overnight. I want to make it very clear that a lot of times when you hear people that have these large portfolios, like that doesn't mean that that's the best fit for everybody. You can accomplish big things with a very small portfolio and a few years of intentional investing. One thing we've learned is that we actually probably scaled too quickly and diversified too much and had too many houses across too many different markets. And it was just chaos to keep track of. And so what we did, we loved investing in rental real estate, residential real estate, where we could grow our portfolio through equity and using appropriate leverage. And then we would 1031 exchange those and trade those up. So now we've actually translated. I still have about 30% of my portfolio in residential real estate, like single family, small multi, but we've actually 1031 into more commercial assets, some multifamily, some retail centers, done some more high-end short-term rentals, I think one of which you maybe had a chance to see in Keystone. But, so we've kind of traded up and consolidated our portfolio just so we wanted to have more simplicity over time.
That's amazing. And a lot of times I hear that from investors, and there's a bit of like a leverage curve where it's like, I want to scale as much as possible. Now I want to focus on quality and maybe not over leverage or overextend myself. And it sounds like you're in that position where you're focusing really on the quality, not just quantity of building that foundation, which is extremely exciting for people listening to this show, because they're not only thinking about how to get started, but what am I going to do after I get my first and second property? Do I want to pay them off? Do I want to keep scaling? So there's a lot of options obviously out there. Zach, what are your biggest strengths as an investor, or even as a business owner for rent to retirement? I know that turnkey rental properties is a really attractive thing for first-time investors. Why is that a lower barrier to entry, or potentially will cause less problems down the road for investors?
Certainly. I'll answer your first question just about what's, I think, my unique things in business and real estate that's allowed us to be successful. And I am just thick-skinned and thick-headed. No, I am tenacious. So, when the going gets tough, I don't let that stop me. I've always been consistent to investing. There hasn't been a single year since I bought that first duplex that we haven't bought real estate. I'm not saying I've made money on all those deals. I've lost my shirt on a lot of deals, but I haven't let that set me back. I've taken those lessons and I've applied them to investing in more real estate. So this game takes consistency, right? You have to get started, get into the real estate game, and then you've got to learn from your mistakes or things that go south, and then, apply that to being a better investor. And you just have to stay consistent. But I've always been creative in solving issues and solving problems. Whenever there's an issue with a property in business or just in life in general, often there's multiple solutions. But if you're someone that's hyper-focused on the negative side of things at hand, you can't see the solutions, right? So the more you can be solution oriented, not being emotionally invested, even though it's hard to do that, and just being focused on how you're going to solve problems and being creative. It's all about being creative. But ultimately, Turnkey, I think, is a great option for people that if you just want to get started and you want to tap into an immediate team and an immediate system where you're not going to have to be a lone ranger and, build your own team. I mean, it's a great option to easily access some of the best markets throughout the country. If your local market's too expensive or is too or a high barrier of entry because it takes too much money to put down on that one property that may or may not be positive cash flow, turnkey investing is a great option for people to consider if you live in an expensive market, if you're just getting started and you want a kind of a predictable way to buy investment real estate. If you're someone that doesn't want to actively manage your properties, a lot of our investors are high paid professionals and they love what they're doing in their job, but they don't want to buy themselves another job. But turnkey, we've seen a lot of people that have bought turnkey for their first few properties and they kind of realize like, hey, I get this. I understand. I see how systems are supposed to work. And then they go on to build on their own portfolio and build their own teams and systems to build larger portfolios. So I think it's a really good starting point to consider.
It's really exciting, and it's almost like, for lack of a better term, it's almost like a crutch on how to use the resources that we have, leverage us, and then start to groom yourself and build your own portfolio. And we're gonna, again, lack of a better term here, but stop handholding you, and you're gonna go out into the world and do it yourself. So it's a really exciting opportunity that you have at Rent to Retirement. Now, Zach, the question I ask everybody on the show, we've heard how you got started. Now, somebody that's in your shoes 15 years ago, just getting started out today, what's one golden nugget that you could give them on how to get started here in 2024?
The cliche, just take action, right? I mean, anyone can say that. I think what I would say is in today's market, and this would be true about any market cycle, is that there's always something stopping you. There's always something preventing you, but you really need to just set your goal to overcoming that and accomplishing your goal regardless of what the market looks like, right? So interest rates, have fluctuated. They've been high and people have used that as an excuse not to get started. It's election year. There's just, economically, there's some turmoil. There's so many things going on that can prevent you from investing. And don't let that prevent you from getting started. That's my best recommendation. I mean, the same thing would apply to if you look back at the pandemic. There were so many people that said, I'm not going to get started in rental real estate because this is such an uncertain time. And look what happened after those past 2 years, right? There's a lot of people looking back saying, oh, I wish I would have gotten started then. But everyone can say, I wish I would have started earlier or been more aggressive. I would say set your goals and ultimately find a way to accomplish those goals. And if you have difficulty or if you don't know what to do on your own, like use the resources on BiggerPockets or find a mentor or find a community of people, like-minded people that are going to be there to support you. When I first got started investing in real estate, Noah, I wanted to understand real estate. I liked real estate as a tangible asset. It was a simple thing to kind of generally understand. I like the idea of residual income. I had no intention and no idea that we were going to build this huge, turnkey company over time that's allowed us to create a lifestyle we would have never otherwise had. And that was not my intention. It just happened naturally by consistently investing and always taking action. And so my point is that you don't know what the future looks like for you, but you have to at least take a tangible action step and always be working towards improving yourself and your financial position, because the sky's the limit and you just don't know what the next 10 to 15 years is going to look like if you never take action on that first property.
That's absolutely amazing advice, Zach, and it shows that you can get started in any economic environment, any political environment, any social environment right now going on. I think you see a lot of companies that got started at the very bottom of the pandemic, and they've skyrocketed higher than a lot of companies that couldn't survive during the pandemic. So it really does show that, there's no better time to get started than the present. And the present is going to keep being there for you. So it's always time to take action. Well, I really can't thank you enough for your time today, Zach. If our audience is looking to find more out about you, you can go to the show notes below. We'll have all the information about Zach and Rent to Retirement there. And my name is Noah Bacon. If you want to connect with me, head over to BiggerPockets. I'll be on the forums. I'll be writing blogs, and there's plenty of resources on there for investors to figure out how to get started, what strategies they want to choose, financing questions, and even how to build your team. Zach, thank you again for your time today, and really looking forward to sharing stories just like Zach's on future episodes. Again, everybody have a great day, and we'll see you next time.